Hi guys, this session will be talking about some of the things that it is better for buyers to do before starting their search for properties, because it will help make the whole process a lot easier and a lot more straightforward, and hopefully reduce the chances of you ending up in a wild goose chase lah. Because this is what I observe from the recent meetings that I have from buyers, because they come into the market, they expect to buy something that they expect to buy, and then they realize that the market is not what they are expecting, and then they end up looking here, then looking here and there, and then as the longer they look, then the more they end up in a wild goose chase, and then they realize that they get caught in a cycle of inaction eventually. So this is what we try not to do, because at the end of the day, as soon as you get caught up in the cycle, it becomes virtually impossible for you to commit wholeheartedly to a property, especially if you are looking at it for investment. Whereas if you are looking at it more for like just a pure homestay, you're not really concerned about the value, then there's not too much for you to worry about lah. Okay. And then, okay, so let's move forward. And there's disclaimer, whatever I share today is just based on my point of view. It doesn't represent any other body's point of view, and hence this is just entirely my own perspective. The first one that we need to do is just to clear up your IPA. Go and check with your banker. If you need help, then you can check with your agent lah. See whether there's any contacts. But if not, you can just approach the bank straight away. But some bankers obviously are a lot faster, but they are more efficient. Some bankers are not that fast, so it's probably better to search for a network of good bankers lah. Okay, why do we need an IPA? Because we have buyers looking around here and there. Then they know how $2 million property, $2.5 million property. They like the layout, they like the facing, everything. Then they realize that they haven't even cleared their IPA, and then they realize that they can't borrow that much. So at the end of the day, if your loan is not able to be, is not as likely to be approved, then your search is going to be pretty much photo because you're not really searching within your means. Okay. Of course, at the end of the day, we try not to overstretch ourselves too much, because when the times are bad, then maybe we wouldn't want to be put in a situation where we are forced for a fire sale. Okay, so try to get the IPA done ASAP. There are some bankers who can clear it within 1 to 2 days, or even less than 1 day if it's urgent. So, but try not to end up in that situation, and try not to end up seeing a unit that you really like, then you realize you haven't done IPA, because you make yourself very kanchong. You make yourself end up being maybe sometimes even an emotional buyer. So we try to avoid that situation. Number two, do your prep work. It's important to do your prep work. Know whether you are a first-time buyer, or are you holding on to a current property? Do you need to sell first, or do you have enough funds for you to pay ABSD upfront, so that you can have a smooth, seamless transition? Which honestly, I think not a lot of people are able to do it. Probably less than 10% are able to pay ABSD upfront. That's why most people prefer to sell first. Already easier for them to sell, to have that easier transition. Sell already, then whatever they can spot in their market, they can commit more straightforward. As you can see in the quote, those who prepare and then they go to the wall, they were more likely to win. So it is important for us to know our objective. Are we buying exactly for just a pure homestay, or is it buying more for investment, or is it more like a combination of both? And if you are going for pure investment, then as long as you are able to zoom into the numbers, you're not so emotional, it is more highly likely for you to make a higher ROI. Whereas if you need a combination of both, you want the homestay and you want the appreciation element, then chances of you having that higher appreciation value is definitely going to be much lower than a pure investment play. Now, let's not even talk about pure home search lah. Okay. Then the third one, once you know your objective, you have to start doing your homework. I would say even aggressively. Try to explore the market as much as possible and understand market direction. Why? Because let's say eventually when you start looking around and then there are some concepts you don't understand, you start looking for professional advice, and then you realize that whatever, okay, maybe you ask the person, okay, what should I be, what are some of the options that I have today? And then the professional shows you, okay, maybe some of the things, some of the recommendations, and then you'll be like, okay, let me think about it. You look around, you can see the show flat, then you think about it, and maybe you take 2-3 weeks, 1 month, 2 months, and then you come back, you realize the unit's gone. Because you finally went around the market, you realize there's nothing much more suited for your objective. Then you come back, the unit is gone, either that or the price has gone up. So whatever is being recommended to you is more valid at that point, and things can change as fast as within 2 to 3 days. I have some instances where I recommended a unit to client, the same day he committed. Then I have some instances where I recommended the unit, I rather recommended development. Okay, okay, we will take a while to look around and see whether we want to should look at the show flat. And then by the time they commit to the show flat, guess what? The price have shifted, or either that or the units have moved. So is that already a good buy anymore? I will probably think not. So it is important that you try to understand the market as much as you can within a short span of time, so that you don't drag too long, you don't drag the process too long, because time waits for no man, and neither does a good property. Let's not talk about the woman part because we are not talking about this topic today. So it is important to do up your homework aggressively, I would say. Don't just okay, today I'm free, I look a little bit, tomorrow I'm free, I look a little bit, because after all, we are looking at $1 million worth of purchase, because those of us who are looking at this channel, we are looking more of a private site, which is usually involving at least 1 million and above. And if that's the case, then if you're going to be putting almost your lifelong savings or earnings there, I don't think it's justifiable for you to just, maybe I just spend 5 minutes a day, 10 minutes a day, even though this is not your full-time job. And if you don't think you have that time, then you have to start looking for a trusted advisor to really help you in that sense. Because let's face it, this is a complicated market. And the problem with this market is that everyone thinks it's like stocks. Oh, I learn a little bit, I learn a little bit about PE ratio, I learn a little bit about market cap, and then there goes, okay, I'm ready to commit. And if it doesn't work that way, that's why a lot of people burn their money in the stock market, and that's why a lot of people burn their money in the property market. And if you are able to really be adept and at understanding the market, I think chances of you losing money is a lot lower. It's like how the big boys, the good big boys in the stock market, are able to maximize their chances of winning. So same goes for the property. Those who really dig in to go and understand the market would have a much higher chance of profiting from it, whereas those people who just are probably even not even say amateur, maybe novice, but who think that they are really good at because of the conventional advice, hearsays, buy near MRT, blah blah blah, and low PSF, and then that's it. And then we realize that at the end of the day, the one that is losing money is none other than yourself. So is that really worth the risk? Okay, so the moral of the story is you need to understand the market enough so that when the opportunity is being brought up to you, you know exactly whether it's a good or bad opportunity. And then think so-called long-term. If you are buying a home for long-term stay, 5 to 10 years down the road, what are the chances of it going up? If you don't mind the property going down, then there's nothing much to say lah. You can just go out there and go and buy lah. But if you are concerned about the value being at least able to sustain itself over the medium to long term, then you have to be very clear again, once again. Why are you buying that place for? Are you buying for really appreciation, or are you buying purely just because you love the location? And is that unit size going to be applicable to you in the next 2 to 3 years? If that is your holding period, likely, or rather your staying period, obviously most people are not going to just stay for 2 years because of SSD lah, but probably I would say 3 to 5 years. Or are you going to be planning to stay there for 5 to 10 years, or maybe even longer? If you're going to be buying a house for 10 years and you may start a family, then you may not want to commit to a one-bedder, because you probably will likely shift very, very soon because of the possibility of family expansion. So time frame is very important in this sense. And there are people who be like, oh, never mind, it's today, there's no good thing there. I will just wait for the next brand new launch lah. Because some people feel that brand new launch day is probably the best price, right? Which I think I've shared a few times before. Brand new doesn't mean the first day launch doesn't mean it's always the best price. We have some instances where we see brand new launch and then prices crash after that because of a lot of factors. So, and if you're waiting for that brand new launch, if let's say you do get the good price, are you willing to wait 3 to 5 years? 3 to 5 years, some take very long to build. Are you willing to wait that 3 to 5 years for it to be completed? And in the meantime, where are you going to stay? Are you going to rent? And is that rent going to be worth the appreciation potential? And what if the property doesn't appreciate? What are the chances of it not appreciating? All these we have to weigh our risk. And then if you are waiting, for example, let's say people are waiting for the upcoming new launch, maybe at Ang Mo Kio, maybe at Leaf at MB, maybe at Piccadilly. Is there a concrete pricing? I would say maybe even developers, they themselves have no concrete idea at this point yet, until the day where they collect the check and then they know what is the interest level like, then maybe they reset the prices. Now there's only indicative. They give us a range, maybe 2002 to 2004 PSF, but at the end of the day, how much can they set? Can they set above 2004? It's possible also. So if somebody is setting, if the developer is going to be setting 2002 PSF versus a 2004 eventually, that's going to make a difference, a whole lot of difference between a good and a bad development. And are you willing to put yourself at that risk of maybe, okay, I'll wait 3 to 4 months later, and then finally this one launches, and then guess what? It's 200 PSF above my expected price. And am I going to just suck thumb and then commit? And if not, am I going to look around at those few that I shortlisted last time and go back? And will there be units still available at that point of time? So it's about minimizing our surprises, and we try not to bet too much on the unforeseeable future. And I think one thing also, a lot of people, they feel like, oh, I need to explore the whole market before I commit to anything. I find those people that they are helped to make their purchase, they tend to make their purchase within even less than 1 month, because they are very decisive. Either that they say, okay, TD, guess what, I trust you. This one is the most extreme. He only see one show flat, no one, not even a resale at all. And then I ask you, why do you commit so fast? He said, no man, I trust you. So but at the end of the day, guess what? This guy's paper gate is more than 100K in less than 5 months. So that's how because he's able to put his emotions aside, he just, okay, now I guess what, I trust your expertise, and then I put my investment in your hands. But of course, we have done up some understanding of the market before, and then he decided, okay, maybe this is not my expertise. He leave it to a trusted professional, and he's able to pull out his emotions from the investment, and hence the appreciation potential is a lot higher. Whereas if you take, I have seen also some clients who take more than 1 year. They've been looking around, and then they realize that, oh, I should have bought that one year ago. But now the prices are so expensive. So they start to compare. Last time they could have gotten something for 1,007. Now they are getting almost the same area for 1,009, 2,000. Last time I should have bought. Now I think too expensive. And I guess what? I think I'll just wait long. And then the more they wait, they become 2,000, 2001, and then they missed out, and they get trapped in that cycle of inactions. And so one thing about not being, the importance of recognizing the market, having the ability to recognize good deals, is that you have to know what are the good deals, and you have to do it fast, because there are a lot of people out there. There are a lot of hunters out there waiting for good deals, and once they see it, they are going to take action. Their check is ready anytime, and if you are going to be there, you take your time and you look, see, and then you come back 3 to 4 weeks. Chances of you coming back and being able to get the unit that you want in this current market is going to be very, very, very low. Okay, that's how fast things are moving. If you take a look at some of the good opportunity nowadays, they are flying away, they are flying off like hotcakes from the shelves. So you need to know the difference between a gold and the real gold and what is just gold plated. Is it just a low PSF? It looks good in the location, low PSF, but what are some of the factors that could have led to higher risk in the long term? So, and then there are people who just, it's just near MRT. Again, I've touched on this a lot of times. And these two developments, this guy over here, the one on the left, just TOP last year. This guy on the left, on the right, TOP 2020, end of 2020. So they are only about 1 year apart. They're not even that far. This guy is not walkable to MRT at all. This guy is definitely walkable to MRT. You can even see the MRT from the condo. And look at this. This is even smaller than this guy. Both are 2 bed. And then this guy is renting today at this price. This guy is renting today at this price. So what are we trying to say? So just because whatever you yourself impose that, or maybe not MRT rental yield is not going to be good. And look, check out this guy. How much is his rental yield? And if you take a look at the guy on the left just now, this is the purchase price of that owner. And that gave him a gross yield of almost 5%, which is crazy high in today's market. And whereas just now the other guy is not too shabby also, even at this price, actually the owner got in quite cheap. So he got a gross yield of 3.6%. And if we take into account ROI is definitely going to be much higher. But in this case, I just compare gross yield. Okay, but this guy over here is able to invest without his emotions, and hence today is able to rent out at this price. So therefore, I think that's pretty much all we have for today. This code I think is very applicable for those people who have too much baggage from the whatever misconceptions that you have about the market last time. If you keep holding on to it, you don't look at the data and start looking at things from a more objective point of view. You insist on the location that you want, you insist on the price level that you want, you realize that you will not be able to get anything in today's market. So I think in order for you to even purchase a new home, or even purchase more importantly an investment with higher appreciation potential, it is important for us to open our minds and look at the numbers, look at the true numbers, look at the real data, why things are possibly going up, or why is it going down, and what are the reasons why. And it is really a combination of a lot of factors, and hence if you do not have the time to really go and scrutinize the market in a shorter period of time, then it's very important, it's more important for you to engage the right professional advice, get somebody you can trust for you to help in order to help you make the right decision and spot the right opportunity and take action, so that you do not have to keep waiting. So like what I mentioned, the other guy who just decided within 1 week, he didn't have to worry at all. He just, okay, where is the next step? What is the next step? And then he's paper gains. And is he able to exit in 3 years' time with a lot of profits? I think definitely, very likely. But did he have to worry too much? Not really. But of course, I will say, to be fair, not all clients are that lucky in that sense, because there are some agents out there who are just selling for the sake of selling. They are not selling you something that may have higher appreciation potential. And if that's the case, it's very hard for you to trust. So if you feel that is the case, you are not able to find an agent that you can trust, then you will have to spend the time to examine the markets yourself, and then are you able to access all these tools that can give you the specific data that you want? And if not, then how are you going to get it? So that is the problem. You may have to talk to a few consultants in order to find out which one is the one that you feel is suitable for your own investment style. Okay, I think that is all we have for today. So yep, if you have any inquiries, you need help with your investment decision, then and you feel that I can help you, then just drop me a text, and then I'll see how I can help. Okay, that is all we have, and thank you guys. Bye bye.